Hello there and welcome. Brace yourselves as we dive into a topic that's as fascinating as it is complex, the global monetary reset. This is a major reshuffling of the global financial deck, driven by economic imbalances, geopolitical shifts, or significant changes in currencies. There are various compelling reasons why this reset is taking shape, from the de-dollarization movement to the rise of digital currencies. Intrigued already? Well, you should be. So, why wait? Let's plunge into this financial wonderland. First up, we have the de-dollarization movement, an intriguing shift in the global financial landscape. Emerging economies like the BRICS nations, Brazil, Russia, India, China, and South Africa, are shaking the foundations of the US dollar's dominance by reducing their reliance on it in international trade. Instead, they're opting to trade in their local currencies or creating alternative payment systems. For the uninitiated, the US dollar has been the world's primary reserve currency since the end of World War II. This means that it's the go-to currency for international trade, a sort of global financial lingua franca, if you will. But here's the twist. This trend of de-dollarization isn't just a rebellious act against the status quo. It's a strategic move that undermines the global influence of the US dollar. This has significant implications for the international monetary system and could potentially tilt the balance of economic power. Consider this. The BRICS nations aren't just exploring alternative currencies, they're actively increasing trade in non-dollar currencies. This isn't a passive shift, it's a proactive step towards a potentially new world order in global finance. Are you enjoying this journey so far? If so, don't forget to hit the subscribe button and ring the notification bell, because we're only just getting started on this fascinating exploration of why the global monetary reset has begun. Moving on, we come to the second reason. The global debt crisis, a ticking time bomb in the world economy. Picture this. A world where both governments and corporations are drowning in debt. It's not a scene from a dystopian novel, but the sobering reality of our current global financial landscape. According to the Institute of International Finance, global debt skyrocketed to over $300 trillion in 2021. Just imagine the number of zeros in that figure. And it's not just a case of a few bad apples. Many nations, including the likes of the United States and numerous European countries, are running fiscal deficits that are simply unsustainable. This has naturally led to concerns about currency devaluation and inflation. But it's not all doom and gloom. These alarming debt levels have sparked some very necessary discussions about resetting or restructuring global monetary policies. Take Japan, Italy, and Greece for instance. They have debt-to-GDP ratios exceeding 100%, pushing them towards fiscal crises. These are not just abstract numbers on a spreadsheet, they represent real-world challenges that affect everyday people, from the price of your morning coffee to the stability of your job. Quite a nerve-wracking situation, isn't it? Next up, we delve into the world of gold and cryptocurrencies and their increasing popularity. Gold, the age-old store of value, and cryptocurrencies, the new kids on the block, are creating quite a stir. The rising interest in these assets is a clear sign that confidence in traditional fiat currencies is waning. Now, why is that, you ask? Let's break it down. Inflation is a silent thief, eroding the purchasing power of your hard-earned money. As governments continue to print money to fund their deficits, the value of fiat currencies is dwindling. This is where gold and cryptocurrencies step in. They offer an alternative store of value, a safe haven from the instability of fiat currencies. Gold, a tangible asset, has been a trusted store of value for centuries. Its scarcity and durability make it an attractive investment. Countries like Russia and China, cognizant of the economic uncertainties, are stockpiling gold reserves, strengthening their economic fortresses. Now let's talk about cryptocurrencies. These digital assets, led by the famous, or infamous, depending on your viewpoint, Bitcoin, offer a unique proposition. They are decentralized, meaning no government or institution has control over them. This makes them immune to the whims of economic policies, offering a measure of financial freedom. The interest in cryptocurrencies isn't just limited to investors looking for the next big thing. Countries too are jumping on the bandwagon. Take El Salvador for instance. It made headlines by adopting Bitcoin as legal tender, a bold move that signals a shift towards digital currencies. So what does this all mean? The resurgence of gold and cryptocurrencies signifies a shift in the global financial landscape. As traditional fiat currencies continue to lose their luster, these alternative assets are stepping into the limelight. This changing dynamic could potentially reshape our understanding of money and the way we transact. A new era of digital gold rush indeed. Now, let's talk about central bank digital currencies or CBDCs, a trend that's gaining momentum. Imagine a world where money is purely digital, governed by complex algorithms and controlled by central banks. Sounds like something out of a science fiction novel, doesn't it? But it's not. It's the brave new world of central bank digital currencies. CBDCs are a new type of currency designed for the digital age. Unlike traditional currencies, they are entirely digital, with no physical counterpart like coins or banknotes. They are issued and regulated by a country's central bank, meaning they have the same legal status and value as traditional money. But what makes CBDCs so revolutionary? Well, for starters, they could dramatically change how money is issued and controlled globally. Think of it as a monetary makeover for the digital age. CBDCs could provide a more efficient, secure, and inclusive means of payment. They could eliminate the need for physical cash, making transactions faster and more efficient. They could also provide greater security than traditional money, as they are less susceptible to theft or counterfeiting. Inclusivity is another potential benefit. In many parts of the world, people lack access to traditional banking services. CBDCs could provide an accessible and affordable means for these unbanked populations to participate in the global economy. Furthermore, CBDCs could give central banks more control over the money supply. This could help manage economic stability, control inflation, and prevent financial crises. But it's not just theoretical. Around the globe, central banks are already experimenting with digital currencies. The International Monetary Fund and the Bank for International Settlements have even endorsed the development of CBDCs as part of the future global monetary system. However, like any revolution, the rise of CBDCs is not without challenges. Issues such as privacy, security, and the potential for misuse are all areas of concern that need to be addressed. CBDCs represent a significant shift in the world of finance. They are part of a broader trend towards digitization that is reshaping the global monetary system. A digital revolution in the world of finance, wouldn't you say? Are you finding this as fascinating as we are? If so, hit that like button. We'd really appreciate it. Don't just stop there. Share this video with your friends, colleagues, and fellow financial enthusiasts. We'd love to hear your thoughts too, so don't hesitate to drop a comment below. And if you haven't already, make sure you subscribe to our channel and ring that notification bell. You won't want to miss what's coming next. Now back to our list. Now that we've covered the basics, let's dig a little deeper into the remaining reasons. The shift toward multipolarity. The world is no longer dominated by a single superpower or a singular economic model. The rise of China, India, and other developing nations is reshaping the global economic landscape. These countries are demanding a greater say in global governance and are challenging the traditional Western-dominated systems. This shift towards multipolarity is likely to lead to a more balanced distribution of global economic power, which could necessitate a reset of the global monetary system. Next, we have U.S. monetary policy and inflation. The U.S. Federal Reserve's unprecedented monetary policies during the COVID-19 pandemic, such as massive money printing, low interest rates, and stimulus packages, have led to inflationary pressures. The devaluation of the dollar, coupled with inflationary concerns, suggests that the global financial system could be moving toward a reset. Example: in 2022, inflation in the U.S. reached the highest levels in over 40 years, sparking fears of hyperinflation or a monetary crisis. Next up, we have the calls for a new Bretton Woods Agreement. Some economists and political leaders are calling for a new version of the Bretton Woods Agreement, which created the global financial order after World War II. A new agreement could establish a different reserve currency or a basket of currencies that better reflects today's global economic landscape. Example of this is the IMF and other international organizations have suggested that the global monetary system may need to be restructured to account for new economic realities, including the growing economic power of emerging markets, moving swiftly to environmental and geopolitical shocks. Climate change, resource scarcity, and geopolitical conflicts, such as trade wars or regional conflicts, have increasingly strained the global economic system. These shocks could destabilize existing financial structures and prompt a reset. Example is the war in Ukraine, which has disrupted global energy markets, food supplies, and trade routes, highlighting vulnerabilities in the current financial system. Next on the list is the rise of regional economic blocs. With global institutions like the World Trade Organization, WTO, losing influence, regional economic alliances are becoming more prominent. These alliances could lead to new trade and monetary agreements that shift the balance of power away from traditional global institutions like the IMF or World Bank. An example is the European Union, ASEAN, and the African Continental Free Trade Area, AFCFTA. These are examples of economic blocs that could develop regional monetary policies. Moving on to global trust in institutions is declining. Trust in global institutions such as the World Bank, the IMF, and even the US Federal Reserve is eroding. As trust in these institutions declines, nations may seek alternatives for managing global trade, investment, and currency systems. An example is the public confidence in central banks, especially after the 2008 financial crisis, has significantly declined, leading to skepticism about their ability to manage economic stability. Moving on to the next reason, the rise of blockchain technology. Blockchain technology has the potential to revolutionize financial transactions and the global monetary system. It offers a decentralized, secure, and efficient way to record transactions, making it an attractive option for global finance. The rise of cryptocurrencies is a testament to the potential of blockchain. If adopted on a global scale, blockchain could facilitate a more transparent and efficient global monetary system. Next up is the declining trust in financial institutions. Since the 2008 financial crisis, there has been a significant decline in trust in banks and financial institutions. This distrust has led to a surge in alternative financial systems, including cryptocurrencies and peer-to-peer lending platforms. If this trend continues, it could force a significant overhaul of the global monetary system. Moving on to the increasing influence of non-state actors. In today's digital age, non-state actors such as multinational corporations, non-governmental organizations, and even individuals can have a significant impact on the global economy. The increasing influence of these non-state actors is challenging the traditional state-centric global monetary system. Next, we have the need for a more sustainable global economy. There is a growing recognition that the current economic growth model, based on constant consumption and expansion, is unsustainable. This realization is leading to calls for a new economic model that prioritizes sustainability and equitable development. A global monetary reset could be part of this shift towards a more sustainable global economy. These are the reasons why the global monetary reset has begun. From the shift towards multipolarity, the rise of blockchain technology, declining trust in financial institutions, to the increasing influence of non-state actors, and the need for a more sustainable global economy, the signs are clear. These factors suggest that the global monetary system is evolving, with countries, corporations, and individuals seeking alternatives to the traditional financial framework. The global monetary reset may not happen overnight, but the trends of de-dollarization, technological advancements like CBDCs, geopolitical shifts, and rising economic inequalities all point to the beginning of significant changes in how global money and trade will be managed in the future. The question now is, are we ready for it? Because like it or not, a global monetary reset seems to be on the horizon. The future of money is changing, and it's changing fast. We've come to the end of this fascinating journey through the world of global finance. We've delved into the murky depths of the de-dollarization movement, where countries like China, India, and Russia are shaking off the greenback's yoke and forging their own paths. We've also unearthed the looming specter of the global debt crisis, a ticking time bomb that keeps economists awake at night as nations grapple with unsustainable fiscal deficits. The resurgence of gold and cryptocurrencies further underscored the dwindling trust in traditional fiat currencies. And who could forget the advent of central bank digital currencies, the next big thing in the realm of monetary policy? These pivotal trends are not just isolated phenomena, they are intertwined threads in the tapestry of the ongoing global monetary reset. But it doesn't stop there. As we've seen, the shift towards multipolarity and the rise of alternative payment systems, among other factors, are also playing their parts. It's like a complex, global game of chess, where the kings, queens, rooks, and pawns are all making their moves. The global monetary reset isn't some distant, abstract concept. It's a reality that's unfolding right before our eyes. It's an intricate, dynamic process that's reshaping the financial landscape as we know it. Thank you for joining us on this journey. Don't forget to check out our other videos. Don't forget to like, share, comment, and subscribe to this channel for more personal finance-related contents. And as always, stay smart, stay informed, and stay ahead of the curve. Until next time, stay curious.